All right, Andrew. I want to make the video. I know it's going to be for the group, but I know you specifically asked this question about negative forex, and go back to your question here. Oh, wrong one. Shoot, where was your question at? This might be a long video. I'm just letting everybody know this might be a long video because this deals with naked forex. A little bit on how I analyze reversals and breakouts, and what's the other word? There's another word I need to talk about. What's the other word? I'm sorry, I'm trying to come back to what you're asking me. If the market is an uptrend and everyone is buying, would you be looking for a sell opportunity? Is that what this is saying? Based on this naked forex, you will notice how price will often push into and beyond a zone, only to eventually turn around. This is a common behavior. It is also the reason why most naked traders find it much easier to trade reversal setups and breakouts. That's true, I agree with that. Reversals are a lot easier to trade than a breakout because the breakout that comes out, especially when it consolidates, when I talk about breakouts, especially for the signals group, when I talk about breakouts, we have to look because we have to patiently wait first. That's the most important thing. That's step one. You have to patiently wait it out. And then when it breaks out, then it's letting you know that they're going to try and set in that direction. Now, people say that the first breakout isn't could be a false breakout. I mean, yes, there are times like that, but when you're when I mean like a massive breakout, I'm talking about a big bullish candle engulfing over the previous candle, and that's what naked forex is more focused on: candlestick structure and the candlestick structure and price action. I'm losing it today. Okay, I had a lot going on a couple hours ago. So candlestick structure and the price action is already tied into it, right? Because it's consolidating. So I want to share. I guess I'll I'll share a couple charts so you guys can see what I'm talking about. So we have USD/JPY running right now, right? All the forex markets are still running. We're in Tokyo sessions. You can see that the best time to short UJ was at 114.5. It came all the way down on this wick, almost to 113.6. Normally when USD/JPY rallies up almost to 80-90 pips, it will retrace down 80-90 pips the same way. And you can see that the kickoff was back here again at 113.6, all the way back to almost 114.6. So that's almost, right? That's almost 100 pips. Yeah. I'm sorry. So it's almost 100 pips. And when it retraced down, right? When it retraced down, when it did a pullback in New York session. So I'm talking about it went up, right? It went up the day before, and then at night it fell back down, and then the next day it fell down. So that's a full 24-hour period, because these are 4-hour candles. So that's already a given factor what to expect from one day to the next day, especially when it's moving up so high. Eventually it's going to pull back down to where it did the kickoff. So what I mean by the kickoff or the bull run, right? When it did the bull run, it started here at 113.6, went all the way up, and then your next candle that closed was a bearish candle. Even though that bearish candle didn't engulf the bull candle, it's already letting you know that it was gonna drop back down. Now this is just based on reading candlesticks and reading price. We know that it's breaking really, really high, right? It's gonna, and the question is, a lot of people ask is like, man, it's gonna go even higher. It's been going up. I mean, that's a pretty strong stretch going up, and that's, you know, I'm talking about, I don't know, 3 weeks straight. So for 3 weeks straight, that's pretty strong, right? And I don't want people to get confused on looking at the relative strength index, that's or the stochastic oscillator or the MACD or any bottom indicators. This has nothing to do with looking at if it's oversold or it's overbought. USD JPY was overbought a long time ago on these lower time frames. And let me show you the difference if you were to follow RSI and not follow your candlestick structure and price action. Let me be honest about this, because a lot of people get confused here by following RSI. I got kicked in the butt so many times by following bottom indicators. Reason being is because I was looking at 80-20, or I was looking at 70-30, or I was looking at 100-0. It doesn't matter what the bottom indicator is telling you. It's just a calculated formula based on that, based on coding and scripting into the formula, so that the math can dictate if it's oversold or oversold or bought. That's it. That doesn't mean that it's a confirmation of buying or selling. If you guys get what I'm saying. A lot of people get this confused. That's why I went straight naked Forex. So let's go back here to the 4 hour, right? Your 4 hour, right? Let's match this. Overbought. How many people would actually short it, right? At that point, right? I'm pretty sure a lot of people would. And I'm pretty sure a lot of people would try to short it right here again. Notice that RSI never came back down to 30. This one came all the way down to 30, right? At the very tipping point here. And it went all the way up. And this went all the way up to here. Okay, I'm drawing points here to where you can understand why I don't use naked Forex. Okay? Notice that this gives you a false reading to short it back to 30. You guys get what I'm saying? When I am based off relative strength index, I'm basing off, you know, if it goes above 70, I'm going to short. If it goes down by 30 or below 30, I'm buying it based on looking at this structure. I mean, based on looking at RSI. That's just on looking at RSI. So the book of Naked Forex, where's this book at? Let me stop this. Where's the book at? I'm going to pull the book up. I'm going to run through this so that some of you don't get confused. Like I said, this is going to be a long video. The reason being why it's going to be a long video, because I'm trying to break it down as much as I can about naked Forex and why I'm doing naked Forex and why I look at naked Forex. You know, because it's very important that people that get into naked Forex, if you get into naked Forex and you were used to looking at RSI, MACD, parabolic star, moving averages, stochastic, what else I use? Momentum, fractals. I was using 8 indicators. None of them beats naked Forex, hands down. None of them. You can strictly just trade off support and resistance or price action. Price action is by far the most, I don't know, the most debatable, the most argued, I don't want to say it, best trading style. That's what a lot of professional traders talk about. Naked Forex. I mean, this is crazy. Another great book is the Candlestick Bible. That's another one. And have I read every single book out there? No, I have not. But I put the experience in there so I can experience every single live trading event, every single live chart for 8 to 10 hours a day. That's what I did to be where I'm at right now. I didn't read a bunch of books. The book that I read the most was Currency Trading for Dummies, hands down, by far. I would say the best book for new beginners and for those that want to learn the fundamentals and economics behind that. Because they talk a lot about fundamentals in there. Those that don't look into fundamentals, that's a really great book for fundamentals. But anyways, let's get into naked forex here, because I know a lot of people have been asking about this. So this is the book right here, and reason being, I only read the first 4 chapters, but most importantly, the first 2 chapters is the most important. Reason being is, guess what? They talk about the fundamentals of forex trading right away. Isn't that awesome? A lot of people are like, what? A lot of people say they don't need fundamentals. Guess what? This book even talks about fundamentals right away. And I was shocked. So this is a really interesting chapter to read. They talk about fundamentals. Let me highlight some key points here. Highlight some key points, okay? Quick lesson in currencies, right? No, that's not it. No, Come on. Aha, here we go. Here's a good one. The forex market is simply a money market, the place where speculators exchange one currency for another. Right. That's just a basic way of saying things what forex is, right? Forex traders buy and sell countries. There's another one. Forex traders are basically buying shares in a country, just as a stock trader buys shares in the company. Hold on, let's see. Come on. You talk about the major currencies right here. This is their nickname. I don't care about that. Players of the forex market. I mean, that is crazy, right? Look at this. The New York Stock Exchange, the world's largest stock market, turns over $75 billion each day. Now, that's just the stock market. Forex traders trade 5 times the amount each day. 5 times 75 billion. That's why it's a $5 trillion market. It's freaking huge. But here they're saying $4 trillion is being exchanged every single day throughout the whole world. I know they dump into lost. I'm just trying to hop into a couple key points in here of the first 2 chapters, because I don't want to say this, because I don't want to say this. Not many people really read the whole book. Not many people really read every single word. So people are just skimming through. What I'm doing is just trying to show you some highlights in here, okay? Let's see, fundamental traders, right? This is if you're a fundamental trader, right? Fundamental traders use economic reports and news reports as the basis for their trading decisions, which is true. That's what I mostly do. I read a lot on Forex news websites. I read a lot on what is going on right now, like especially investing.com, fxstreet.com, forexfactory.com, all Forex website that has upcoming news. So Bloomberg's all right. Bloomberg's not the best, because you strictly want to pay attention just to Forex website news as much as possible. So Bloomberg is more focused on stocks around the world. Let's see, Forex traders have a fundamental approach where closely examine world events, which I do. Okay. Interest rate decisions and political news. I talk a lot about political news in all my videos. They even say this too. Even Currency Trading for Dummies talks about it too. You never know what to expect for the foreign exchange market. You don't even know. Trump is crazy when he's speaking. You never know what comes out of his mouth and could impact the markets in a matter of seconds. That's how crazy political news can impact the foreign exchange market. A lot of people don't believe in that, but I see that all the time now. And like I said, fundamental traders are concerned with properly interpreting news, right? Economic calendar is also part of it. whereas the focus of a technical Forex trader is quite different. So they go into the technical side. Like I said, I'm not much of a technical guy, but based on price action and candlestick structure, then that's my technical analysis. Okay, now they're talking about technical indicators. So this is something that I want to talk about. Every single indicator that you use so far, it could be, like I said, it could be, it's a MACD, RSI, moving average, stochastic. It could be fractals. It could be momentum. It could be the Ichimoku. It doesn't matter what it is, right? It doesn't matter what indicator what you use right now or what you used before. Okay, and if you still plan on adding more indicators, you're gonna get more confused because now you're looking at, I was adding Bollinger Bands, moving averages, fractals, parabolic star, and then I had a momentum, stochastic, MACD, and RSI. That was 8 indicators. That's crazy. And I got so confused on looking at every single indicator because I didn't know what the confirmation was anymore. Had I decided to slowly delete them off my indicator list and just strictly use 1 or 2 indicators, I would have been fine. I made more money using less indicators than using more indicators. That's crazy. That is my honest my honest answer, opinion on this. I made more money going naked Forex, using 1 or 2 indicators versus using 8, 10, 12 indicators. That's just the honest way I can say it. So indicators, like I said, this is a very important paragraph right here. Indicators are simply another way of looking at a market price in much the same way that it's possible to examine the speed of a car in different ways. It is possible to examine price charts in many different ways with indicators. Just for a moment, consider how many different ways you may measure the speed of a car. True. And they give you this. Everything that's being measured per hour, per mile, this is just like having 5, 6 different indicators. Likewise, there are many ways to look at a price on the chart. There are more technical indicators than telephone call centers in India. That's crazy. You think there's a lot of indicators on your MetaTrader 4? Look at TradingView. There's over thousands and thousands. I don't even know anymore. Like, what did they say? I don't know what I was told. Like over 10,000 different types of indicators. I mean, it's crazy. And this is a very important paragraph to read too. What is naked Forex, right? Trading without indicators, right? Many traders focus on the indicator, which is true. Nearly 90% of Forex trading books, the vast majority of Forex sites on the internet, and Forex trading seminars focus on indicators and indicator-based trading. That is, I mean, I didn't expect to hear that. 90% of the books have indicators, and they talk about indicators. Currency Trading for Dummies doesn't really talk much about naked Forex, but they do mention a little bit about it based on price action. So this is another very important paragraph to touch up on. Let's see here. Focusing on indicators may be one of the primary reasons that some Forex traders do not make money. Right here. That's another important. It's another important one right there. Right, and right here. I'm going to highlight this. This is right here. This is page 8. Indicators can be confusing, unhelpful, and just plain wrong. In the next chapter, we'll take a look at technical trading and some of the tragic trading mistakes Forex traders make and how to avoid them by adopting the naked trading approach. This is a free PDF file. Like I said, I only read the first 4 chapters. And like I said, the most important thing is this. This is the most important thing. I don't care how many books you read. I don't care how many chapters you read. I don't care if you skim through this book. The number one thing that comes down to your style of trading is your style of trading and how you look at the markets and how you predict the outcome of the markets and your mentality, your mindset, your focus, and can you handle your stress and emotions behind any kind of uh, the high market volatility, when there's high impact news, and when the markets are not going your way. I mean, I'm talking about, I'm not talking about naked forex. What I'm talking about is the psychology behind the way you look at markets and how you trade it and how you think about it. That's what it comes down to. There's, like I said, like I said, if you go into naked forex and you want to do naked forex, you gotta understand. I mean, seriously, you gotta understand the first two chapters. I mean, that's the most important thing. I mean, they even talk about, like I said, they even talk about, they talk about like indicators are confusing and why forex traders don't make a lot of money because they're looking at everything at the wrong right. You're looking at the wrong places in trading. I'm going to go to chapter 2 here. Avoiding trading strategy. This is another important chapter. That's why I said that the first two chapters are the most critical chapters to understand. Because if you don't understand it for yourself, you're not going to understand trading forex for yourself, and you're going to keep you're going to end up keep blowing accounts or end up keeping. You're not going to make any kind of money. So if you are reading this book, you're probably a technical trader. You may have spent money and effort learning about indicators. You may have learned through experience in trading with indicators can be very difficult. In some ways, trading with indicators makes it difficult to find profits. Okay. You can talk about this. All indicators are created from price data. Price data enters an equation and is spit out as something else. It's a formula. They even talk about this. The indicator changes price data via a formula. Everything is coded into a formula, like math. Everything is calculated in math. I'm taking some coding classes for software development. It is nothing I've seen before. Yes, you type in a bunch of words and numbers, but if the numbers don't meet up, then what you type in don't even add up anyway. So everything is a formula to be an equation to make sure that it is coded properly so that it comes out so that it equals exactly what you're typing into. That's what it comes down to, right? And so coding is tough. I'll be honest about that. Coding is tough, but you can see what they're talking about based on price data. These very same indicators based on price data are meant to hint at future movements in the market. So they try and predict the future, right? That's the biggest thing, right? I'm always trying to predict the future. I'm always trying to look ahead. I'm always trying to make sure where the weekly chart candles are going, where the monthly candles are going, and where this trend might end up slowing down or where the trend might end up stopping at. If the trend is going up so high, eventually it's going to fall back. And that's what you're looking for is a reversal so you can sell it all the way back down. Like if you go up a mountain, eventually you're going to have to go down the mountain. That's what it comes down to. When you look at that, when you look at the mountain picture as a very simple picture of climbing up the mountain, right, on the uptrend, what pair it is, and then all of a sudden it does a major reversal because reversals are important. Your reversals are going to make you a lot more money than a breakout because when the reversal happens, you can swing that reversal until it's done, until it's finally done, and it reverses back again up to an uptrend. So the breakout, I don't want to say this. The breakout, my way of looking at the breakout, I know I'm hopping in on different subjects here, and I said it's gonna be a long video. my point of view on a breakout, like I said, when something is consolidating for that long, here, let me show you a chart here. I'll come back to the book here. I'll come back to the book here. You know, let me show you. Let's talk about breakout, right? When I look for a breakout, okay, you can see right here, right? USD/JPY struggling, resistance going down, right? And then boom, shoots all the way up. To me, on the 15-minute chart, it's a breakout right here. And then you see the breakout going down, right? Because you can see it's created so much resistance, and it's just going down lower and lower and lower, and then shoots down. Now, a lot of people get confused because when they look at this, they're like, oh yeah, USD/JPY. Let me take off the RSI. This thing is bogus. Okay, so when people look at, like I said, this is another good breakout, a bullish breakout right here. Another good bullish breakout. Okay, bearish breakout. Consolidation, going down, right? A lot of people look at this and they're like, well, they look at it like it's gonna keep going down even further. This is different when it breaks to the upside, starting at the bottom, and how this is going down, right? And it's never come back to retest higher, so it's breaking down lower. If you guys get what I'm trying to say here, what I'm trying to say, I don't, like I said, I'm trying to make it as simple as possible for you guys to understand. But if you're brand new, you're not really gonna understand it much. If you're, like I said, if you're brand new to the markets for a couple of months and you don't know the terminology or the definitions, which I would suggest reading up on that so you know your terms and definitions in Forex. I'm not saying you should read up the whole definition or the whole Bible of Forex, but you should know. So you should know what breakouts are and what reversals and retracements are. You should know what support and resistance is, and you should know what a trend is. And that's what I'm talking about. You should definitely know what a candlestick is. And okay, so what I'm trying to highlight here is that the breakout going up is different from the breakout going down. Okay. Here, I would buy. Here, I would sell. But the reason why you want to sell here is because it never came back to test higher. The moment it breaks a new high, I'm looking for it to target even higher. Doesn't matter what pair it is. Like, I'm just being honest. It doesn't matter what pair it is. When it breaks higher and it keeps going, right? How USD/JPY did yesterday. Went all the way down here, 113.5, and then shot all the way up to 114.5. So that's 100 pips, right? So this is why USD/JPY is a really great pair to scalp, and it's a really great pair to swing. And by far is the second lowest spreads compared to Euro USD. We know that Euro USD has the lowest spread, but if you look at USD/JPY, it is very comparable to low spreads to Euro USD. Maybe a little bit higher, but not like as high as the pound or USD CAD or Australia, New Zealand. And the reason being is because you can't beat USD/JPY. You know why? The reason why I like scalping and swinging this pair is because this is a universal days pair. You can scalp this thing during the day of New York sessions. You can scalp it at night during Tokyo session because it deals with the Japanese yen and it deals with the US dollar in the morning. It deals with New York because of the US dollar in the front. It deals with Japanese yen because Japanese Asian sessions at night. So that's why it's the best pair to trade. To me, I love this pair. And like I said, to identify reversals, to me, this is not a reversal. Okay. If you were looking at, like I said, if you were seriously looking at the RSI, it was overbought at this price already. And yes, it was overbought at this price right here. But that doesn't mean that it's gonna go all the way down. A lot of people get confused because I got confused too. I didn't know what a reversal was. I didn't know what a retracement was back then. You have to understand when something pulls back, and I don't want to say this. I don't want to confuse anybody. When something pulls back, like when USDJPY is pulling back down pretty hard like this, right? Does it mean it's going to drop even further? That's what a lot of people see, right? And that's what I saw too. I'm like, man, this thing is going to go all the way back down. It isn't go all the way back down. What price are you looking at? You gotta know your targets. A lot of people just look at, oh man, it's going down. I'm just gonna sell it. You gotta have some kind of mental price target. I don't put no stop losses because I already have a price target what I'm shooting for. Whatever the price target is, I know how much money I'll make. I'm not talking about pips. I'm talking about, okay, if it drops from 114.5 all the way to 113.6 or 113.5, then I know that I'll make $300-400. So, but I mean, the most important thing is that if you identify a reversal and you think it's a reversal, you gotta be damn sure that's a reversal. Because otherwise, to me, if I see it as a reversal, I'm stacking 10, 15, 20 open positions on that pair. Because I want to catch the very top of the trend going down. You guys get what I'm saying? Or when it or at the very bottom of the support going all the way back up. Now on the 15-minute, basically this is based on scalping. For me to see a reversal, I'm showing you guys the weekly chart, right? The best time to buy USDJPY was when this candle engulfed the previous candle, this bearish candle here. And that started to kick off going all the way up. Just like this one. Notice how this candle engulfed the previous candle, which is a bearish candle, and a major uptrend back up here, 140. Same price, right? We're sitting at the same price, 114 again. It's crazy what you can do, right? It's crazy what you can see. I know a lot of people are going to ask me, like, well, there is no bullish engulfing candle, but you can see the gap. That's a major gap. That's a major gap going up on a weekly chart. I don't know what happened that day, but that's crazy, right? Crazy what you see. And this is, like I said, it's based back on candlestick structure, but if a previous candle is going to engulf the other candle, like if that candle is going to engulf over the previous candle, obviously it's going to keep going. It's going to keep going. What gets, like I said, what gets really confusing is when prices are consolidating. So like let me zoom in here. Don't just talk about UJ tonight. So that's what I'm going to do. Talk about USDJPY tonight. What I'm talking about is this, right? When prices are just consolidating, okay? This push back down, right? You can see the wick, bearish candle. So I would sell it. It didn't drop enough. It didn't drop much. So it kept stalling right here. So guess what? So by the time this bullish candle engulfed over these candlesticks that were consolidating, obviously it was going to keep going. So now the question is this going to be another bull candle? I'm going to sell the dollar tomorrow. So obviously it might end up being one of these doji candles here. I don't know which one it is. It could be this bearish one or this one right here. Overall, UJ is still going on a massive uptrend if you look at the monthly chart. Okay. And I'll show you guys the monthly chart. This is pretty strong right here. I mean, you can see right? Where it came down here, now it's going up. This candle, right? This candle that closed here just broke a little bit above this resistance here. My next line of resistance would be 117 based on the monthly here. So your monthly chart overrides all the other charts because your monthly charts creates the biggest support and resistance candles. Don't forget that. If you look at the 4-hour and the 1-hour and you don't look at the monthly and the weekly to identify long-term trends, you're going to get yourself caught up, especially when you're swinging. Because you might end up swinging for each session, or you might end up swinging for a couple of days. But then if you look at the overall monthly chart and the overall weekly chart, then you're like, oh my gosh, I could have swung this trade for a whole month. A lot of people are afraid of swap fees. If you're afraid of swap fees, then you might as well find an account that doesn't have swap fees and doesn't have commissions and doesn't have spreads, which I highly doubt there's any kind of account that does that. No matter what, you gotta pay the spreads. No matter what, there's gonna be some kind of commissions. And if it's a non-commission account, guess what? Your swap fee is a little bit higher, but guess what? It's worth it for swinging. It's the most easiest way I can say it. And so now you guys get a little heads up on what I see for UCJPY for long term. But I mean, right now, a lot of people are seeing the sell opportunity, right? Based on what they see here, right? Resistance going down, create support, come back. Okay, that's another set of resistance going down. This is on the 4-hour chart. It gets confusing, right? Because this candle is just sitting here. Why in the world would you waste your time looking at the 4-hour if it's just sitting there? You need to look at the 15-minute or look at the 5-minute, or if you want to look at it, look at the 1-minute. Because guess what? You're looking for a breakout now. I'm looking for a breakout. You can see that the past 15-minute candles hasn't really done anything. We know that this is the lowest price of today, and well, pretty much for the week, and we know what the highest price is. So now you have a price gap. My price gap is the highest price so far is 114.545, and the lowest price of New York sessions was 113.668. Now I have a price gap. Overall, it is closer to the support price. Now you have a price gap to look for where it's going to go. I didn't say that you should start scalping. Obviously, I wouldn't be wasting my time scalping anyways. I'm still buying this pair because I bought it at the bottom here at 113.6. And I'm looking for it to shoot back to 114, come back close to 114.5, or maybe, above 114 before NFP. So that way you don't get confused looking at, oh, I don't know where it's going to go tonight. I said, when prices are not moving that fast, then you just gotta like I said, I like using a 15-minute chart for negative Forex. And that way you don't get confused on, like I said, second guessing, looking at indicators, looking at different time frames, or looking at something else. That way you can be like, okay, now I know now I got a price gap of where it might go. Okay. We know that it got rejected here. Okay, we know that it got rejected here. You can see how this lines up with this. Okay, this lines up right here, 114.0. So if you want to move it even closer, you can also do that. I don't recommend adding no horizontal because it just gets too confusing. Now, you know that these two resistance meet up, and we know that this is the lowest price of today. So now we're looking to see where it's going to go. Now you have a really tight, narrow price gap to where it's going to consolidate. It's going to consolidate throughout the whole night. And then now you're looking for a breakout to shoot above 114 here, because that's where it fell back. And this is where it fell back right here again on the previous session. And we see 4 candles are here to create support here with 113.6. Now we're just looking to see where it's going to go. Now you got a very narrow price point on where it needs to target for USD/JPY on the 15-minute chart. I mean, this is a flat out, like, I don't know how much more easier I can make this. I don't know how much more simple, how much more it can be simplified. But this is just strictly just using 2 horizontal lines and trying to pinpoint a consolidated price, especially during Tokyo sessions, because during Tokyo sessions, there's not a lot going on. So that is something to read up on. If you want to chart it, which I do recommend, that way you get used to it. And then if you get used to the 15-minute, hop straight to the 1 hour. And your 1 hour meets up very closely to daily highs and daily lows based on the 15-minute chart. I previously talked about that on my full tutorial on my Naked Forex. This is much more in depth, because I didn't want to go too much in depth about Naked Forex because I wouldn't want to bore any people. But this is very, very like fine-tuned and precise to like my Naked Forex style. The only way you're gonna get to know my Naked Forex style is if you see me live trade. That's the only way. So there you guys have it. And I want to see what else. What are questions that you had? Breakouts, tracements, how to, like I said, identifying breakouts and reversals. It's easier to identify a reversal versus a breakout. But yeah, and it's easier to trade a reversal based on what the book talked about. Like I said, the first 2 chapters of that book is very important. You don't understand the first 2 chapters, I can't help you out. I mean, as a self-learner, yeah, as a self-learner or a self-educator or a self-made, I guess if you're a self-made millionaire, where you basically self-taught yourself as much as you could to be at your own level of success. Well, that's what I'm trying to say. At your own level of success. That's the most easiest way I can say it. Perhaps you're assuming to most traders and that you find a very tricky proposition to determine whether the market has made a breakout and traded beyond its zone. Yeah, I never read that far. Like I said, I only read the first 4 chapters. Like I said, the only reason why I stopped reading the Naked Forex book was because I wanted to implement my own way of interpreting the Naked Forex. If you guys get what I'm saying. Like I said, it don't matter how many books you read. The question is, do you apply what you read, and can you interpret it in your own way of how you read the book? That's what it comes down to. Now, the book has its own way of how they look at things, right? But when you see it, then you just apply your way of what you see. That's what it comes down to. It's not going to be 100%. There's no way someone's going to copy 100% of my style of trading. There's no way. Okay? Because I look at the markets differently. Like I said, I'm more fundamental than technical. Now I'm into candlesticks and price action with Naked Forex now. And I have my own way of looking at breakouts, reversals, and every trader, like I said, is the most easy way I can say it. It doesn't matter how I look at the markets or how someone else looks at the markets, as long as we somehow make profit on the same trade, right? Doesn't matter what we see first. What matters is that we both are making profit on the same trade. Because our mentality or our way of thinking towards the markets is totally different. And that's something that I cannot teach, to be honest. I can't give nobody my brain. I can't give you, there's no way I can give you my mindset, but I'm trying to give you my mindset as much as I can based on naked Forex here. This book is, like I said, this book is great, but you got to understand the first 2 chapters of the book. You don't understand, like I said, every first couple chapters of the book is the most important, because if you don't understand the beginning, you're never going to understand the end. I mean, that's the most important thing. People try to skip through the end, trying to look for the final result. But yet they don't understand the process, and they don't understand the beginning of the process. You guys get what I'm saying? That's in anything in life. That's in any business. That's in personal. That's in relationships. All that stuff. It's not about what happens at the end. The question is what's going to happen. Like, if you apply, read it, practice it, and do the same thing, and then you go, okay, now I see something, and now I want to keep it. And your strengths are the most important aspect in anything. It's okay to look at your weaknesses, but your strengths are the money maker, the money making tool every single day. It goes in Forex, business, personal, anything. And so I'm getting tired, but anyways, tomorrow's NFP. Like I said, get ready. I'm gonna get ready, and like I said, I hope this video makes sense. I mean, came out. Like I said, this was just to answer one of my customers' questions, but like I said, there's more to come, and this, like I said, if you do want to get to naked Forex, you have to take off every single indicator. You have to take off every single indicator, and you have to reapply. Don't be too focused on price right away, but you have to look at where the candlesticks are going, and you have to look at, like I said, I would recommend looking at shorter time frames, 15-minute, 30-minute, even 1 hour. Don't look at the 4-hour daily, weekly, and monthly, because it gets too confusing. I got confusing at the higher time frames on naked Forex. I had to readjust myself by looking at the 15-minute, 5-minute, and I was just looking at the 5-minute, 15-minute, because I had to readjust myself back into those shorter time frames to understand more about naked Forex. So I'm not saying you're going to understand it right away, but you have to deliberately, you have to constantly stare at the chart without any indicators. And you got, like I said, you can use those 2 horizontal lines, outline your support, resistance. Now you got a price gap, and then now you can scalp it or wait for the breakout if it's consolidated. That's why I have it, so that I know that, okay, this is going to consolidate, and I'm looking for a breakout, and that's it. Once it breaks outside of those 2 horizontal lines where it's going to break up or break down, that's it. That's my direction that I'm going to follow. And I don't want to say, to identify false breakouts, most of those false breakouts are from high impact news or unexpected news. And like I said, it's I don't know. I have to make a video on that, because I don't want to go into false breakouts, because there's a lot of it. You'll see it. It's totally different from looking at to me to me, I don't want to say breakout, but a major breakout that's bullish candle or a bearish candle engulfing over everything. there's no way. There's no stopping that candle, and you can tell a difference when it's a false breakout. When it's usually a false breakout, it usually spikes up or spikes down, and there's no news. There's no high impact news. There's no economic news coming out. But something major happened in that country based on political events. And they'll probably like release it like 15, 20 minutes later and explain why this pair jumped 20 pips or why it spiked down 40 pips. But then all of a sudden it retraces immediately back up or retraces immediately back down. When people, if people are constantly staring at the charts and they see a false breakout like that, I remember this too. Like I would hop in on a trade because I see that as a direction, and I'm gonna go for it. And all of a sudden I lose money because it wasn't going anywhere. It just faked out people. People call it fake outs. I mean, you just got to be careful for those false breakouts, and you can't put, like I said, you don't want to be jeopardizing your account because of what you think you're gonna miss out. That's the most important thing. If you see a breakout, especially when it's a false breakout, and you put like all your money into that breakout because you think it's gonna keep going, where it's gonna go up or go down, don't even do it. You can blow your account right away when people are so eager. People are so excited because they see that and they're like, oh my gosh, I'm gonna go ahead and stack positions on that, or put a big lot size on it. Bad mistake. Like I said, you have to keep trading, especially if you're new. You have to keep trading to identify these breakouts, and then understand that retracements are not reversals, and that reversals are not retracements. Can't stress that enough for those that the R versus the R, right? Retracements versus reversals, and reversals versus retracements. I mean, you can't mistake those two. You mistake those two, all you're doing is just second guessing where the trend's gonna go. A lot of people say your trend is your friend, right? It is. But when it retraces, people don't have the patience for it anymore. You lose patience because you were building so much money on this position, on this trend, and it retraces, you lose half your profit, and you get out and you try and get in on it because it's going down, right? Because you're making money on the uptrend, and then it goes down, and you think it's a reversal, so you close your position, and then you start selling it, you start shorting it down, and all of a sudden it goes right back up to where it fell, and it keeps going up even higher. And how many times have we seen that, right? And you have to understand that if the uptrend is not done, especially for USD/JPY, it ain't done. I don't see it being done anytime soon. Like I said, at this rate, it might target the 117, even 118 price long term. When I mean long term, I'm talking about for the next 2-3 months. It could very well since it's a sensitive volatile US dollar pair, it could very well shoot up there by the end of this month if it wanted to, the way it's been going, to be honest. And you have to understand the volatility behind that. You know, if the previous candle is that much, and if it is that much of an engulfing bullish candle, you have to expect another one. You have to. And so that's the most important aspect behind candlestick structure, like reading the candlesticks pattern, right? The candlestick patterns, candlestick structure, the trend structure. Every session has a pattern. What else? Price action. I mean, my way of looking at Forex, I mean, it's fundamentals. Like I said, I'm giving you guys as much as I can. And I know it's not. I know it's not enough. But like I said, I mean, you're gonna find something. You're gonna find something that works for you. Keep it. Make it your strength. Don't lose your strengths. Don't be trying hopping in on different strategies and methods, because then all of a sudden you're just trying to figure out which is the best money making strategy. Bad idea. No discipline, you're not going to keep your money. a lot of people, like I said, a lot of people don't know how to manage finances. I'm talking about personal. I'm not talking about business. Forex is your investment. If you keep losing your investment, why the heck are you still even wasting your time doing it, to be honest? To be honest, right? And I mean, like I said, it's okay to struggle the first couple months if you really put that time and action into it, the time and effort into it. It's okay to struggle the first 3-6 months if you really dive in. Not many people have the time to dive in and do what I did last year, like stare at the charts 8 to 10 hours a day. Yeah, I haven't had a job for 2 years, so I was stay home dad for 2 years. I didn't start trading Forex till January 2017. So I mean that's my story. And man, I mean, like I said, I was doing other online businesses before that, but I feel I'm going forever. But anyways, I can keep going. I know I can keep going, but I'm not going to. So Andrew, hope that answers your question. If it does not answer your question, I have to make another video. I have to make another video. I know there's plenty more videos I'm going to make, but like I said, I really hope this makes sense for you and for everyone that's watching this, and that I'm not confusing nobody. I'm just trying to make it as simplistic, as simple. My way of talking about it. I mean, I'm trying to make sure that you're not confused on what I'm talking about. And like I say, if you don't understand the terms and definitions of Forex, you're going to have to understand some of that terminology so you don't get confused on asking what support is or what resistance is or what price action is or what candlesticks are, what naked Forex is. I mean, the book is there. I mean, it's a free book. It's a PDF file. It's almost a 300-page book. My book that I'm offering, it's 135 pages. So it's less than half of that. But other than that, like I said, yeah, other than that, that's it, man. Just be ready for NFP tomorrow. And if you're not ready, you're gonna lose it. And if you're new to NFP, just watch it or trade on your demo. Don't be blowing account like what I did on NFP. Don't be doing that. That's not a good idea. That's not a good way to start either. Because if you can't manage your stress, losing money, you shouldn't be doing this. That's what it comes down to. Be flat out honest about it right now. You cannot manage your stress when you're losing money. Don't even think about it. That's the most easy way I can say it. Other than that, you guys have a great night. And that's it, man.